All right, guys, it's February 2nd, 2023. We're looking at EU 1 hour charts on your screen. On the left hand side, I've got my buy side drawings. On the right hand side, I've got my sell side drawings. So, what happened since yesterday? Well, we were around here when the interest rate decision came out and initiated higher prices, breaking all recent structure, taking all that liquidity, and then after the mitigation, which was up here, we've had a strong pullback, and I've woken up to this strong pullback, and I'm around here, right? That's where I've sort of gotten to my screen. So the first thing I do is I look at my mitigation on the higher time frame. So I'm on the sell side, right? Sell side drawings because we've just sold off of here. We've mitigated something and we're pulling away. So I need to see what is it we've mitigated. Is it bullshit? Is it something predictable, something we understand? And so I immediately go to my daily to look, but the daily wasn't able to give me the information I needed. It was the 4 hour that showed up all the information that I needed. And so what we have here was a 4 hour sell primary with a standard mitigation. All right, so let's go and have a little look at that 4 hour chart now. And so over here is what we've mitigated. And as we can see, we've got this range, initiation, break of structure. And then it was this range that came back in above here, took the liquidity and initiated lower prices. Okay, it broke on itself and it broke major structure at this point here. And so this whole thing here has been left unmitigated. Why do they leave it unmitigated? For now, for this mitigation that we're experiencing right now. Now, as we observe our A, B, and C leg, between our B and C leg, we can see that this is the last known range on this time frame that we can see. The last known demand, I believe they call it, right? Supply or demand, blah, 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 sell zone. So we mitigated that sell zone right from the what I call as just like the regular range, the range that we'd expect to mitigate from. It wasn't a deep. A deep would have been here. Deep would have caused for lower prices also. Deep mitigation, but this is just standard mitigation. So all is well there. So we've mitigated something we know, something we expect to mitigate, and something we expect to have a reaction off of. What kind of reaction? We do not know. We don't know if this will be the reaction that causes a huge down push, breaks of structure, takes out all this liquidity. We have no clue. What we can do though is see that we have mitigated something, and the mitigation has had so far a strong reaction. That's all we know. That's all we need to know, and all is well, right? So now, what would I do? So the next thing I do is I look at my buy side and I figure out my buy primaries. Where was the last known buy primary? So this one got drawn on just recently because it just formed. Once we had the breaker structure here and the breaker structure up here, this activated. And so this is the new range that I'm expecting to have a reaction from, or they're going to take it out, use it as liquidity, have a reaction from what I call a deep mitigation, or they're going to just keep pulling prices through it, and it will become potentially a transitional. Who knows? We're gonna find out what they do. But we're very interested in this range here. We're very interested in what's below it, and we're not too interested in all of this sort of stuff here as far as bouncing. So even though we've got this big bounce, I'm not too fussed about it. I'm not too concerned about it. This isn't sort of an area where I expect to see a large bounce. So if we do get a large bounce, I believe it will be for liquidity creation purposes, in which case it will be giving more weight to all of this kind of stuff up here to sell and short the market. So we'll be just keeping an eye out on that. Now let's move to our lower time frames. So the first thing I'm going to do is as I come over to my lower time frame, is I go right to my cells and I want to see where we've mitigated, right? So I look up here. I go, well, this was the mitigation. This is all this interest rate decision initiation, and I start looking for sell primaries. I'm trying to find what the market's up to. Okay, so I've got this high here. I then see that they created a new high, broke structure. I believe they actually took out major structure at the bottom, which also gives significant weight to this being the new high. And then, as we can see, we've got this range here. This comes in, takes the liquidity from above this range, but holds within here. So it's sort of like a mitigation, I guess, here somewhere. And then they slowly break structure on itself and then major structure to activate it. So let's zoom in a little bit. Price has never come back to this location, and then they do it all over again. They create a range, initiation, it breaks some structure over on the left-hand side of the screen. This range pops up, takes liquidity from it, breaks on itself, and then breaks structure again, forming a sell primary. This, if we look between the B and the C leg, this is the range that we'd expect price to hold, or at least expect price to have a reaction from. Sure enough, in this instance, it does. This could have been a short trade right here. Again, they do it all over again, right? So now instead of using this as the range that's going to hold, they've actually used this as the range initiation, the break-in structure, and then this is the range that comes in, breaks on itself, breaks major structure. This is now activated as a valid trade. We look between the B and the C leg. We can see that this actually, it looks like a sell primary in here. And they use this as the range to hold price. There's the mitigation. Again, another sell possibility could have been in here. And as we look, this is the high. So where would we be expecting and looking for price to turn around? Somewhere below here or somewhere above here. It's quite simple, above or below. Above meaning this could become liquidity. We'd like to see this taken out as well if that is going to be the case. But if this is, this could also hold. The price could mitigate somewhere in there. But we expect this to actually hold. We've broken major structure, right? So as we come in here, we look, we observe, oh, look, they've mitigated. And then it's again, rinse and repeat. So what do? Here's a new range that they create. They come in. This takes the liquidity from above there, but doesn't break the structure high. Forming a sell primary, it breaks on itself, it breaks major structure, comes back in, we analyze between the B and the C leg, we see that this is the major range, boom, comes in. Now this is interesting, this mitigation is interesting because actually it comes right above that range, meaning this is a deep mitigation, meaning one thing, an initiation of sells. So here's another good trade location, if anyone was awake or trading or available to trade, whatever. And then they did exactly what they did just previously. They used this as the range. They use all this sell primary stuff as a range, as the liquidity, and then they use this one to build above it, to take liquidity from it, breaks on itself, breaks major structure, and then what happens? Comes straight back to the open, because if you look between the B and the C leg, there's nothing major for us to play off of. So when that happens, the open is a good area for mitigation. Sure enough, they mitigate the open and push prices down. And then we just literally follow intention. Range, initiation, break of structure. They came back in, take liquidity, and it break on themselves, break on structure. So we're expecting this to hold. This is the last known range between that B and that C leg. This is the last known range here. And so we're very interested in that. And so this, now we're getting on to talk about my actual trade that I took. I only took one trade today, and we don't even need any buy-side drawings whatsoever at this point. There's a bunch of buy-side drawings I'm going to show you before we end the video today. But as literally we're just talking about, this is the narrative, this is the story that we're talking about that started all from over here. We're just following intention, right? And it's just about watching how they build it. That's the build is different every time, but the intention is always same. You know, they once they've got an intention set, they deliver price in the same way every single time. It's just it's built differently. For example, these ranges, this was a sharper range than perhaps last week when it was a slower range when they did it. You know, that's what I'm talking about. So anyway, this is where we would expect to have this mitigation, this range here. There was this one connecting range right here. It's hard to see because I've got all this scribble over the screen, but there was a connecting range right here. And so I was thinking to myself, well, look, we're in a higher time frame sell primary. It's quite large. And so does price have to come to this gray box? No, it doesn't. Can price come to the connecting range that connected to it? Absolutely. Have we seen that done dozens, millions, thousands of times? Absolutely. And so as I see here, I just need a little bit more confirmation before I'm going to get involved. And what's my confirmation? I'm going to treat this as a sell primary that took the liquidity. I'm going to make sure, number one, it's broken on itself, and number two, it's broken on major structure. Check, right? And so, am I willing to blindly trade off of this? No, I do need to see a rejection of price. And so I analyze between this B and this C leg, and I can see I've actually got I haven't even got it drawn on here, but between that B and that C leg, this is where I expect price to hold. It's that last range, last known range. And so this is where I was expecting it to hold, price to hold. This range formed, range initiation breaker structure adds money to the top there. Sorry if this is not going as clear. Hopefully it's very clear to everyone who's been watching my vids for a while. You'll know what I'm talking about. If not, just go back. I explain things in a lot more detail. This is more of a rush through because it's the same process over and over again. So anyway, they stack money here. This is the range that comes in, takes money from above that range, yet holds within here. All I'm looking for is a confirmation that we're shorting. And for me, I took a short on this bar. I didn't want to take it on this bar, I took it on this bar. So I shorted the 15-second big bar, I guess you could call it. It's a what do you call it? A full OB, a full-bodied OB. There you go. Finally got it out. And what's a full-bodied OB? It's one where you have a bar that goes up and then it comes back down, right? So that's a full-bodied order block, lots of orders. What does that also look like on a different time frame? It will look like this. Wick. A wick comes up, a wick goes down, right? And then they initiate prices in the other direction. So they came up, created the wick, up, down, and then away. That's what that looks like on a higher time frame. On a higher time frame, have we seen that over and over again? If you went to a 5 minute, you'll see it was just a wick. And so I short right here, got a terrible fill right down here. I'd have loved my fill to have been obviously something like here, or right where I actually wanted it, which is more sort of like there. But anyway, it dropped me a little bit of slippage. Ended up entering here, not a big deal. Comes down and takes me out for a full 10-hour profit. Now, the interesting thing about this is, even though this formed a sell primary, right? We got this range, initiation, breaker structure. This comes in, takes liquidity and goes. Even though it's done that, look where we've stopped. Look at this high and where it stopped. What has it stopped in? Hasn't stopped anywhere significant. It is a transitional order block. That is going to become liquidity for sure. Just when? When, we do not know. So I'm not holding much weight that this is going to hold for very long. It could hold for a long time. I could be wrong, but from what I've seen, transitionals, when we mitigate literally through a thing like this, and it's not mitigating a sell primary or buy primary, then these are likely to get taken sooner than later. And so that's what my anticipation is. Now, I'll be looking for sort of buying opportunities as well, from our most recent buy primary that we can see a bounce from. Now, if we go back to the higher time frame, I'm also expecting price to come down to this box here, and this is where I'd love to see a buy from. Love to see a bounce, kind of a signal. It doesn't have to go high. It doesn't have to come back up here. It just has to bounce a little bit for me to get a decent profit. And this is where I'd expect to have that bounce. I'd also expect to bounce beneath here, like we spoke about earlier. So that's what I'm thinking as far as current price action and my trade today. Now let's go over to the buy side drawings. I'm on the 15-second chart as well. And so I'm observing price. Remember, I'm at the chart around here. Here's 7 a.m.-ish. And I get to the chart around 7 a.m. PST. And I see what we've mitigated. And I wrote a deep mitigation of a buy primary. What just happened there? Okay. We'll go look at that in a sec. And so I've got a deep mitigation of a buy primary right here. And if we look left, we can see it. I don't know if this time frame is going to work. There it is. Oops. So we've got all these primaries drawn on, but you can see how this one, range initiation, here was the actual range that last known range that we could find, and then they mitigated right below it. So that's a deep mitigation, and with a deep mitigation, we expect initiation away. And so that's what we literally had this deep mitigation and initiation away. Will it hold? I don't know. Where would we expect price then to hold from? Well, we've got primary, 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 all these primaries over here, and on the 15-second we can see them much clearer. But this is the last known primary, so wouldn't we expect us to bounce from here? And where would we expect to bounce from? Could it be this range right there? And look what's happened. Boom, it's bounced and it's building higher prices. Will it go above here? Who knows? Will it go above this transitional that we spotted from earlier? Who knows? Likely, I think it's likely that this would be a good place to bounce and come up above here. So this is where I'd be looking for a buy if I was still trading today. I'm not trading right now. Got plenty of other stuff to get on with today, so I'm going to be going off and doing that. But that's my trading morning, and hope you guys are crushing it. Hope you're smashing it. Hope you're making a ton of R, having the best time of your life, literally living your dream lives. And yeah, I wish you all the best. I'm going to spend 5-10 minutes clean up all my scribble over here, and yeah, that's all she wrote today. All right, aloha. Catch you guys soon. Take care.